Well, welcome everyone to my third quarter market update for 2018. The market continues to perform strongly across the board, however it's certainly nuanced with a number of key trends currently shaping the market. We are seeing renewed interest, albeit tempered, in the medium and high density apartment markets, particularly in areas with strong owner-occupier fundamental. The tight credit environment continues to pull the reins on supply, with the bulk of new construction to complete in circa 2019 to 2020. Some of Brisbane's most experienced developers are actively pursuing opportunities in recognition of current market dynamics, seeking counter-cyclical buying opportunities with a medium-term view on delivery and at price levels well back from the peak periods of 2013 to 2015. Medium to high density site opportunities throughout southeast Queensland coastal markets, Gold Coast and Sunshine Coast, remain strong. The majority of new product in this market is trending away from the investment market towards the owner-occupier market, with a strong focus on quality, unit size, proximity to beachfront and lifestyle amenity. Market conditions for the fringe city market, investment townhouse market, is less bullish than previously experienced, with good approvals carrying a premium due to the ability to bring stock to the market readily and with constraints and council scrutiny increasing risk. The house and land market activity continues to perform very strongly throughout all major SEQ corridors, with activity generally only limited by available land supply. Demand from builders, investment sales channels and retail owner-occupiers is fueling strong activity in this sector. Key property economic indicators signal continued growth in this market. There is a period of uncertainty in some of the local authorities, with Ipswich City Council appointing Grant Chamello as interim administrator and Moreton Bay Regional Council in a planning and infrastructure negotiation with the state government. Brisbane City Council is also implementing new policy which will restrict townhouse development for some low density and emerging community zone land. Ongoing challenges in the house and land market include land fragmentation, structure planning, development credits and infrastructure charge calculations and biodiversity related issues. Regional markets throughout Queensland remains depressed, with financiers and receivers and manager-led development site sales dominating the market. Sale volumes are substantially lower than the peak conditions of the resource boom. However, there are some early signs that these markets have reached their low point and we are now seeing an uptick in the market, particularly in major regional markets such as Mackay. Activity in the childcare sector remains strong. However, it is interesting to note some of the negative media attention around the volume of centres opening and increasing vacancy rates. Pent-up demand led to a major surge in new development in recent years in this sector, led in part by developers and investors. We expect demand to persist for areas with strong demographic fundamentals, including new near city locations with higher barriers to entry. Market conditions for alternate asset classes including aged care, retirement and manufactured home estates are generally buoyant throughout SEQ. The A-Care application process closed in August, which brought about a flurry of activity in the lead up to the close date, with groups seeking to secure sites in demand areas to nominate for the 2018 bed licensing round. The tight credit environment is the largest macro factor shaping the industry, from site acquisition through to delivery and settlement. Major funders are still somewhat active in this space, however are focused on servicing existing clients. There are many second-tier and private funders active in the market, providing an integral role in getting projects out of the ground through to completion. The current credit environment is also having a major impact at the retail end of the market, with funders heavily restricting investment lending. So, if you're looking to buy or sell a development site or simply discuss the market in general, please do not hesitate to contact me or any of my colleagues at Ray White Special Projects. Thanks again for listening and I look forward to catching up again soon. Cheers.